But if you open the chart up to March, none of the moves lately have been big. The long end is consolidating. You can say there's an upward drift towards 0.75%, but it is really tight. Now, we have market coming out. The PMIs, these are May preliminaries. And if you look at the manufacturing component, it's 39.8, and that's versus 36.1, which was an all-time low. And if you go to services, 36.9, and that's versus 26.7, which was an all-time low. And finally, the composite at 36.4. So this series has only been around since 2017, but you get an idea. Like much of the data, it's not good, but it certainly has improved from some of the worst case levels that we experienced in March and April. Now let's get back to the charts. We know that the Fed is into the corporate space now. High yield is one of the issues that have made some nervous. Now let's look at two ETFs. HYG, that's the high yield. LQD, that's investment grade. Since March 1st, put them both on the same chart. You can see they clearly have improved, even with very little heavy lifting by the Fed, of course. And when we look at the security side versus the ETF side, and look at Barclays, investment grade and high yield on the same chart as well, you can see, boy, they have really become much more well behaved. From well over 1,000 on high yield to about 720 basis points over. And on investment grade, you can see it's now under 200 over. So these are good improvements that represent real progress. We had Johnny Fine from Goldman saying, there's a lot of activity in that investment grade space of historic proportions with regard to how many companies are tapping and how investors seem pleased to get involved. And finally, let's look at the euro versus the dollar. This is a chart going all the way back to April 1st. You can see we're really bouncing around 110. That's a 200-day moving average. Let's see if the euro currency can pop to the upside here. Carl, Jim, David, back to you.
All right, Rick, thank you for that. We'll watch the impact of that data. Take a quick break here. Boeing is leading the Dow now up almost 6.5%. It's really only a 3-week high here, but it's the first crack above the 50-day since February 21. Pretty good so far.
Hello, East Street Nation and all friends, fans, and listeners from coast to coast. This is Bruce Springsteen with Music for Troubled Times. Bruce Springsteen hosts Volume 4 of his DJ show from his home to yours on East Street Radio. Hear it through the weekend on East Street Radio Channel 20 or anytime on demand with the SiriusXM app.
When running a business, HR issues can kill you. Wrongful termination suits, minimum wage requirements, labor regulations, and HR managers' salaries are not cheap. They're $70,000 a year. I'm Alan Jones, founder and CEO of Bambi. I created Bambi specifically for small business. Get a dedicated HR manager, craft HR policy, and maintain your compliance. All for just $99 a year. Seriously, let's change HR from your biggest liability to your biggest strength. With Bambi, your dedicated HR manager is available by phone, email, or real-time chat. From onboarding to terminations, we customize your policies to fit your business and help you manage your employees day to day. All for just $99 a month, period. Month to month, no hidden fees, cancel anytime. Get a free HR audit today.
Go to Bambi.com/XM right now to schedule your free HR audit. That's Bambi.com/XM. Spelled BAM to the BEE.com/XM.
SiriusXM. This is SiriusXM. The world of business.
30-40% returns.
Opportunities driving investors.
When you see those kinds of numbers, it's a reason to buy, not a reason to sell.
Your money on the line.
This is a strong consumer economy.
They may have to actually extend the merger.
CNBC.
Let's get the very latest on the story.
SiriusXM 112.
This is an important message from the CDC about coronavirus. We must all act now to slow it down by taking care of ourselves and not putting others in harm's way. To help stop the spread of coronavirus, avoid crowded areas and stay home if you can. If you must be out, stay 6 feet away from others and practice good hygiene after being in public spaces. We need to stay apart, but we're all in this together. Visit coronavirus.gov for the latest information from the CDC. That's coronavirus.gov.
To Michigan this afternoon to visit a Ford auto plant. The plant does have a policy of wearing a mask. In an open letter, the Attorney General of Michigan is urging him to, quote, respect the great efforts of the men and women at Ford and across the state by wearing a facial covering. AG goes on to say the president has a, quote, legal responsibility state law to wear a mask. Jim, the mask might be interesting to some. More interesting, though, is from a productivity standpoint, how these plants are faring and what kind of additional costs they may be facing as they try to keep workers separate.
I was thinking, this is, you talk about how Best Buy is a problem. People not going to the store. I mean, here's a problem. Can you go on these assembly lines? This was like what happened, obviously, with Tyson. I don't know. This could actually be, this may not be a smooth meeting. I mean, this could be a tense meeting. I don't think he wants to wear a mask. Ford's not doing that well. The ventilators, I don't know. The president was never really that happy with how it went on with GM. I don't know. This could be some fireworks. It's worth watching.
Yeah, there's a lot to unpack.
Yeah. I mean, look, when Pence went to Mayo Clinic, which was probably the place that everyone needed to wear a mask and then didn't wear a mask, he actually had to apologize. He actually said that he should have worn one. So now here we are with this issue that I think the president is pushing everywhere, which is that reopen. I think he does not respect necessarily what a mask can do for the other person, which is why you should principally wear the kind of mask that we wear in America, which is to not get somebody else sick. And he has been a role model for people who think that masks are for systems. Put it out there.
But we should also keep in mind the idea of what exactly the cost is going to be of maintaining social distancing in these kinds of plants, and whether you can continue to have the same rate of efficiency that you had previously when people are further apart, when they're not able to work in the same fashion, when you have to provide them all PPE, go through these things. Not to mention the fact that they had to shut a couple of them down already, right? Because they had the cases.
It's not a Lamborghini where you each get your little station about 20 feet away, you put it on, and each one's got, you guys are wearing leather aprons, and you kind of drop the Tic Tac, and was tempted to eat it off the floor. To my wife said, well, no, it's not that clean. But, it's not Lamborghini, where they make 4.5 a day.
Right. And unlike so many jobs like our own, guys, can't do it from home. Dow's up 40 points. We're back after a short break.
Trading balls with major risk results and households in the stock market. Have you noticed all the massive fluctuations? The impact of coronavirus and the upcoming election is hugely impossible to guess what will happen next. With Vantage Point, you don't have to. Text the word demo to 411-411 to find out how our technology can forecast market trend changes with up to 87.4% accuracy. That's right, 87.4%. Text demo to 411-411 to get what you need to stay ahead of market trends and better protect yourself from sudden downturns. Vantage Point's patented technology analyzes huge quantities of global data in seconds. No more guessing when to stay or when to get out. Text demo to 411-411. Send you a link to our free demo. Text the word demo to 411-411 so you can better protect your hard-earned capital with Vantage Point. Don't wait. Text the word demo to 411-411. VantagePointSoftware.com for terms, conditions, and prices.
Message and data rates may apply.
Are you a business owner in need of extra time and money to grow your business? With the help of Finance Pal, you no longer have to take on the costs of hiring full-time accountants, buying computers, software, and leasing office space to run your business. We specialize in secure cloud-based accounting, payroll, and tax services for small businesses and franchisees nationwide looking to focus on growing their business and becoming more profitable. You can outsource all your accounting, payroll, bookkeeping, and tax needs for one low, affordable, flat monthly fee. Finance Pal will assign you your own dedicated accountant that handles everything for you, and you'll also get tax planning to save you money and help you reach your financial goals. Get started today for as little as $99 a month. The setup is very easy. For a free consultation, dial 800-263-0119. 800-263-0119. 800-263-0119. Finance Pal, the only friend your business needs.
You're listening to Sirius XM Radio.
We're going to see other categories that tech goes after.
What matters next in tech for interviews? AI is your businesses.
Beginning of a wave of companies that go public over the next 6 to 12 months.
This is where Silicon Valley
What's the next big thing?
meets Wall Street.
Is this turning into more than a 2 or 3 day
Scott
phenomenon?
Alley
any story related to that index and all the stocks in it, you can always go to CNBC.com.
Football Sundays are back on NFL Radio.
Colts win in overtime. An incredible comeback.
Every Sunday is the ultimate classic Sunday with 3 classic games.
The Patriots have won in the greatest comeback in Super Bowl history.
The NFL's ultimate
The
moments.
most dramatic comeback in playoff history. And the Bills will take their season alive.
A triple header of classic NFL action starts Sunday at 1 Eastern on NFL Radio Channel 88. Have you been denied credit? Are you paying high interest rates because of a low credit score? Thousands of people have relied on CreditRepair.com to help rebuild their credit score.
I had to get my first car. I had to get a used car, high interest, so I knew that things were done from there.
For over 15 years, we've helped thousands with their search for solutions to credit issues. We communicate with you, your creditors, and the credit bureaus with a unique approach designed to remove items like late payments, collections, charge-offs, liens, bankruptcy, and foreclosures that are unfair or inaccurate.
I've gone up 40 points already.
There are many services offering to tell you your credit score and even monitor it for you. But what good is just knowing your credit score when what you really need is to fix it? Credit Repair members see a significant improvement in their credit scores month after month. Call now to get your no-obligation credit consultation, including your free credit score and free summary credit. Don't delay. Call 800-281-0844. That's 800-281-0844. 800-281-0844.
You're listening to Sirius Radio.
After hours market action.
If you're in the market, you're probably feeling pretty good right about now.
What will tomorrow bring?
How do I want to hedge my portfolio in this?
Experts explain their top trades.
Our traders will pick stocks that will light up your portfolio.
This money. Weekdays 5 p.m. Eastern. CNBC. Sirius XM 112.
This is an important message from the CDC about coronavirus. If you are young or otherwise healthy, you are at risk, and your activities can increase the risk for others. Do not visit nursing homes, retirement, or long-term care facilities unless you need medical assistance. Practice good hygiene. Wash your hands. Avoid touching your face, sneeze, or coughing to a tissue inside of your elbow. Disinfect frequently used items and surfaces as much as possible. Visit coronavirus.gov for the latest information from the CDC. That's coronavirus.gov.
Nothing. They mark it up a little, and they make a lot of money. This morning, TGX put out their negative numbers, as we know, because most places were closed. They're reopening, and where their stores are reopening, they have now told us that they have seen very strong sales, and those 3 words can send any stock higher. My challenge ourselves, TGX has been a tough thing to own lately until now. I think it's still a big buy, given the fact that all of the retailers that are in trouble are going to look to them for cash.
Interesting, Jim. You know, that chart, you look at it, and it's clearly not a V, but it might be the half of a U here. I mean, it certainly reflects settling in at lower levels than before.
Yes, it does, and I think that because there's still a lot of stores that are closed, they did suspend the dividend. The one thing I like about TGX, literally, is that this is the pick of the litter moment. I mean, Target even had terrible apparel numbers in the first 2 months. And they had to get rid of that inventory. That's good inventory. TGX can take the non-branded or whatever. And, every one of these stores, you hear that there was so much apparel in the month of March. And they just did, but then when people go to TGX, they don't care that it was March. March is apparel at some fancy store. So beware, they got the right. They have the right merchandise, which is going to take the stock higher.
Yeah, interesting. So how about tonight?
Well, we got to talk to Brian Cornell. I thought Target's growth was great. There's a lot of net series out there. If he maybe doesn't have the gross margins, hey, they said that at 106. Take 2, his stock is down despite the best, a shockingly great quarter because there was Strauss is not promotional. He said, look, this may not continue forever, and I guess people wanted to say it will continue forever. And then the Keshor, this may be the Palo Alto breakout quarter. I'm waiting because I know that he's in for the rounds, and maybe he can pull it off. He's a smart guy.
One of the big prints of the week, Jim. We'll see you tonight.
All right, thanks so much.
6 p.m. Eastern. All right, see you. In the meantime, good Thursday morning, everybody. Welcome back as well to the Straight Up Curl Quintanilla with David Faber and Sarah Eisen. Markets hanging in there. Dow's up almost 70 points. Data's been somewhat encouraging from the ISM a few moments ago, and now LEI. Let's get to Rick.
Yes, leading economic indicators due out, and of course this is an April number, LEI. Don't see it, and I'd like to remind everybody, this number is 61 years old, started at 59, minus 6.7 last month, was the worst ever, and it is now down 4.4%. So down 4.4 following the historic down 6.7, and like many data points today, it seems as though April might not be good, but in many cases it's an improvement over the historic low rates of most data points in March. Now, existing home sales beginning released for April, and for that we will aim east to Diana Owen. Diana?
Existing home sales in April dropped 17.8% to a seasonally adjusted annualized rate of 4.33 units. Believe it or not, that's a little better than expectations. The street was looking for 4.24, but it is still the largest drop since July of 2010. Largest one-month drop, you'll remember back then, was when the homebuyer tax credit from the subprime mortgage crisis expired. It is the slowest pace since September of 2011. Sales were down 17.2% annually. Now, the big number here, though, is inventory. The supply of homes for sale at the end of April, 1.47 million. That is the lowest ever. It is a drop of 19.7% and represents a 4.1-month supply of homes for sale. Not only did people not list their homes in April, but people who were listed pulled their homes from the market. That created, would you believe, competition, and prices jumped to a new record high, $286,800, the median price of a home sold in April. That is up 7.4% year over year. Now, prices, sales fell across the nation, but most sharply in the West, down 25% compared to the Midwest, which was down just 12% month to month. One interesting note in this is that while single-family home sales dropped 16.9% month to month, condo sales dropped a much wider 26.4%. And the Realtors chief economist Lawrence Yun says it could be people didn't want to be in condos that have shared common spaces and elevators when they were looking to buy. Or it could be, quote, a long-term trend of people wanting to buy away from the city and into the suburbs, and we've been talking about that a lot. One positive note, though, he did say realtors are reporting a lot better foot traffic in May now as governors reopen states. People are getting out to open houses again, and we have seen that in the mortgage purchase applications, almost flat compared to a year ago last week. Back to you, Carl.
Wow, some incredible numbers, Diana. Thank you so much, our Diana Olick. Let's bring in Evercore founder and chairman Roger Altman, talk about what the market's been trying to tell us in the past few weeks and what the data's been trying to tell us as well. Roger, it's always good to check in with you. Good morning.
Good morning. How are you guys doing?
We're pretty good here, hanging in. I want to ask you, I mean, the data's gone from the horrific when you look at claims to the mildly encouraging, at least month on month, from some of the numbers we're getting out today. We know what what equity investors are clearly banking on. It sort of collides with what the minutes told us out of the Fed yesterday. What are you seeing in this reopening that seems sustainable?
Well, first of all, it's a good thing I'm not an investment strategist or a money manager because I would have gone bankrupt a long time ago. I'm very puzzled by the equity market valuations. I mean, we all know the S&P is only off, S&P 500, only off 8% to date. I think there are three possible explanations for this. One is that investors are looking ahead to a very strong 2021 and perhaps for a vaccine sooner rather than later that could be produced in big volume. I find that dubious because if you look at the mainstream economic forecasts like CBO over the past 48 hours, which was released over the past 48 hours, CBO is forecasting a very weak 2021, and that growth at the end of 21 would be only 1.6%, that it would take 3 years to recover the lost output as a result of this economic contraction, and that earnings, S&P 500 earnings, would not return to 2019 levels in 2021. So that you look at that and you say to yourself, if investors are looking for a strong 2021, where is that going to come from? The second possible explanation, of course, is just the sheer amount of monetary expansion. Between the Fed and the ECB, their balance sheets are approaching a $10 trillion expansion. M2 is growing 15%, when 2% is considered normal. This is a version of the Stan Druckenmiller argument the other day, when he referred to the market as being the most overvalued he'd seen since 1999. But it's also a version of what happened in 2008 and 2009 when the Fed actually targeted equity values in order to improve consumer net worth, household net worth, and promote consumer spending. So that's a possible explanation. And the third is the obvious, which is that markets overvalued and will correct. I'm not smart enough to know which it is, but I have to say the argument that the market is ahead of itself seems a logical one to me, including that our investor surveys show a lot of bearishness, and of course a lot of money is coming out of equities right now.
Yeah. So it sounds like you think there will be a reckoning once the second order effects become more evident, right? Once household balance sheets begin to crack because of the scarring of unemployment and the like.
Well, there are two, Carl, there are two cliffs, so to speak, which are straight ahead here. One is the expiration of the Payroll Protection Program loans, which is June 30, and then is the expiration of the extra premium and unemployment insurance, and that expires in July. And so you ask yourself, will the recovery have proceeded to a level where the economy can take those expirations in stride? Or alternatively, will those two programs be extended? I don't think the recovery will have proceeded to the point where it'll just absorb those easily. And if they're not extended, and it's hard to tell now, I must say I think that's a real problem. But there are some strange things occurring that you hardly ever see in the real economy. One of them is that incomes are actually up because of unemployment insurance making up for lost earnings among those who are qualified for it. And that's a very big number. I saw continuing claims this morning, I think, at 24 million. And the other is that household net worth is actually up because consumers can't spend because of the lockdown. That's the opposite of what we saw in 2008, 2009. Now, that may not continue, but it's odd to see that, and that's a cross current versus these cliffs, these expiring cliffs.
Roger, just want to, it's Sarah, throw another headwind at you.
Hey, Sarah.
Because you've sort of guided us all along on China and U.S. versus China. The president really taking it up a notch, some scathing tweets where he accused China of a massive disinformation campaign on the coronavirus. I mean, to me, that was as close to pointing the blame at President Xi Jinping as he's come, something he has not done. So where does this go, and what sort of economic headwind does it represent?
I think this is going south, meaning that the U.S.-China relationship, which already has deteriorated a lot, is going to deteriorate further, at least for the next 5.5 months before Election Day, because the president needs some enemies. If you look at the latest polls, he's not doing very well. And China is enemy number 2 behind Vice President Biden. So he's going to get, I think, increasingly hard on China. And if you look at those Commerce Department rulings of the past 3 weeks, and you look at some of the interesting announcements, for example, from Intel and TSMC, you see that there's a rethinking of national security going on in terms of what we need for domestic production. I happen to think it's a bipartisan issue. I think Democrats generally agree. And I think the so-called Cold War in technology and otherwise between the U.S. and China is deepening. And that's, to some extent, unfortunate, but that's the way it's going.
Hey, Roger, it's David. I would assume your own caution, is not just based on your view, but perhaps also born from some of the conversations you have from senior management at many of the companies you advise. What are you hearing from them? Where is the focus right now, the CEOs that you regularly speak to or seek your advice? Are they still focused on liquidity and on just sort of living to fight another day, or are they getting more optimistic?
Well, David, there are, broadly speaking, 2 types of companies out there. There's one group that is concerned about liquidity, credit ratings, access to borrowing, and balance sheet issues. And that group has been very active over the past 2 to 3 months shoring up liquidity, as you can see from the amazing volume of financings that has occurred in recent weeks. It's remarkable, both on the straight debt side and on the equity and equity-linked side. Amazing volumes. And the other group of companies is those that are financially strong or whose businesses remain strong. You know, the Apples of the world, and there are quite a few in that category, not as big as the first category, but quite a few, who view this in many respects as an opportunity either to gain market share or buy some assets they've always wanted to buy, but are otherwise on offense. I don't think the equity market is in sync with what CEOs are seeing in the businesses and the outlook for the medium term. But the Fed the Fed has been very effective in reopening markets. You have to give the Fed a tremendous amount of credit because we had some very dangerous days about 2.5 months ago when people had trouble even financing positions in treasuries. And that has allowed so many companies which were under liquidity pressure to refinance and to push out that pressure. And so the strains from a financial point of view, with the exception of some obvious sectors like airlines, have been mitigated, and that's a good thing.
Hey, finally, Roger, some high-profile hedge fund managers are making some pretty sizable bets on inflation in the coming years. When you get an explosion in money supply like the kind we just talked about, does that seem like a reasonable point of view or a reasonable strategy with which to enact a playbook?
Well, for their sake, I hope those are longer-term bets because we all know that short-term deflation is the greater risk of us seeing some deflation. I don't, as you can tell from my view on the economic outlook, I don't see inflation as an issue. And by that I mean actually occurring rather than anticipated. You know, through 2021, I think we have demand problems, not inflation problems during that time. So if you're talking about 2022, 2023, 2024, those may be good bets because unwinding this monetary expansion and unwinding the fiscal expansion, you know, we're looking at a $5 trillion deficit for the next federal fiscal year, depending on what this next economic rescue bill includes. That unwinding is going to be very, very difficult. So longer term, that may be a good bet. Medium term, I'd be skeptical.
Roger, always good. It's great guidance on a bunch of different topics. Hope to see you soon. Stay safe.
You.
Roger Altman.
Thank you.
Sarah.
Eminence Capital founder and CEO Ricky Sandler joins us on the other side of the break. Why he's supporting a herd immunity approach to the virus. Next, don't go anywhere. We're back in just 2 minutes with the S&P 500, little change, and the Dow at 79 points, and the Nasdaq in the red.
Football Sundays are back on NFL Radio.
Let's win in overtime. An incredible comeback.
Every Sunday is the ultimate classic Sunday with 3 classic games.
The Patriots have won in the greatest comeback in Super Bowl history.
The NFL's moments.
What a comeback in playoff history. And the Bills will keep their season alive.
A triple header of classic NFL action starts Sunday at 1 Eastern on NFL Radio 88.
Hey, I've been meaning to ask you for your investment professional's name.
Jim, he's great. I got it from Joanne, got it from Sean, who...
Okay, let's pause right here. Jim may be completely legit and could do great things for the money. It's also possible that Jim doesn't have a stellar past and may not even be a licensed investment professional. So, how do you know? You can get the full report from Investor.gov. A free, simple search can reveal important information that will help you make an informed decision. Before you invest, Investor.gov.
The final season of inventory is happening now at Copperleaf. Experience the finest in traditional Western living and get your gorgeous 1 to 3 plus acre mountain home site priced from only $79.9. Plus, for a limited time, pay no closing costs. This spectacular mountain paradise offers pristine Rocky Mountain views, private access to the historic Shoshone River for incredible blue ribbon trout fishing, a prime location next to the entrance of Yellowstone National Park, and modern amenities, including central water and sewer, Underground Electric, and more. During your private company tour, you can choose to drive your own vehicle or take advantage of our safe and sanitary tour option. Call 866-935-2632 and ask how to take a live video tour of your beautiful 1 to 3 plus acre mountainside home site priced from only $79.9 at Copperleaf. Don't wait. Call 866-935-2632 to take a live video tour of Copperleaf or visit liveyellowstone.com. SiriusXM. This is SiriusXM.
Midday market action. I think they just continue to learn. Top traders review the trends. Best performing sector of the year remains the epicenter of trends. Keep an eye out in the stock for now.
Deal happening in the sector.
Halftime report. Weekdays, noon Eastern, CNBC, SiriusXM 112.
Or click to order today and receive a 30-day risk-free trial and $100 off.
Welcome back. Time for our ETF Spotlight. Today we're taking a look at the First Trust Dow Jones Internet ETF, ticker FDN. Under pressure today, but still up more than 40% over the past 2 months as Amazon and Facebook hit new record highs. TechStep takes a step back today. Another name in the group, Expedia, rallying today despite seeing its first revenue decline in 8 years. Stock still down more than 20% for the year. And on that note, don't miss tomorrow morning an exclusive interview with Expedia's newly appointed CEO, Peter Kern, on this show tomorrow, 10 a.m. Eastern. We'll be right back here on Squawk on the Street. Don't go anywhere.
A payroll and HR company needs to be prepared for whatever's going to happen. You could say that over 70 years of experience helping businesses all over the world run smoothly is good preparation. But for ADP, that's not enough. To make sure millions of people are getting paid on time and in compliance, we're staying on top of each new piece of legislation. So when it comes down to it, ADP isn't just a payroll and HR company. We're the company that helps you navigate the complexities. ADP, HR talent, time, benefits, and payroll. Informed by data and designed for people.
America in 2020 is facing a crisis. Business has been booming, but the coronavirus has ground it to a halt. However, America is still the #1 oil and gas producer in the world, and energy consumption is not going away. It's Mark from the Smart Oil and Gas Show in Dallas, Texas. Investing in oil and gas wells can still be a great option to diversify your portfolio, increase monthly income, and get great tax breaks. Visit our website at smartoilandgas.com to request a free insider's guide to learn oil and gas investments could help you reduce your tax bill and build incredible wealth. Call us at 833-645-4500. That's 833-645-4500.
Investments in oil and gas are speculative and should be considered carefully with your tax and investment professionals.
Liberty Mutual Insurance Company helps you customize your home insurance so you only pay for what you need. Unlike things you paid for you didn't need, like the Vagnado 2000. A Wi-Fi connected vacuum that uploads Dust Bunny data to the cloud for real-time optimization. Whatever that means. But really, it's just a very expensive doggy chew toy. With Liberty Mutual, get customized home insurance so you only pay for what you need. Liberty, 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 liberty. Only pay for what you need at libertymutual.com.
This is SiriusXM Radio.
CNBC, Jim Cramer. Welcome to Cramer. Other people want to make friends. I'm just trying to make some money. This market's winner simply refused to die. I do not think people realize how big this is. There's always a bull market somewhere, and I promise to help you find it.
That one, weeknight, 6 p.m. Eastern on CNBC, SiriusXM 112.
There's Tuesday on NBC.
Welcome back to Squawk on the Street. Our next guest is pushing for a herd immunity approach when it comes to fighting the COVID-19 virus as states begin to reopen. He is Ricky Sandler, Eminence Capital's founder and CEO, who joins us now. Nice to have you, Ricky. I want to start off, though, on the markets before we get to this letter that you recently penned. I was looking back. Your last appearance with us on CNBC was March 16th, and you were very bullish. In fact, you were saying the market could make new highs. We'll have pent-up demand. We'll have massive fiscal stimulus in the second half of the year, you said. Fiscal stimulus, we'll have lower interest rates, lower oil. You largely were right, at least, in terms of where the market went. It was 2386 the S&P closed that day. We know where we are now. The NASDAQ was 6904. My question, are you now a seller given the rally that's taken place since you made those comments on March 16th?
So I'm definitely less bullish on the market here. And I am... And part of the reason I'm less bullish is some of the reasons that led me to send this letter out. I think that my best case scenario, which is the scenario I laid out, is potentially off the table because of how politicians and media and the academic community and the scientific community have taken a hold of this debate. And so I would say I'm not bearish. I'm still on America, but I'm less bullish than I was then. I still believe that we have a chance to make new highs. We have a chance to have all the optimistic things that I said play out. But we as a country have to begin to make the right decisions. And so I took to my network and my peers and tried to get people to start to see the issues a little more.
Yeah, why did, I mean, you've explained in part why you chose to do it, but Ricky, I mean, I know you as a rigorous investor. I listened to your advice when or at least I want to hear your arguments when it comes to why you would buy or sell a particular stock, but you're not a public health expert. You're not an immunologist. I don't know that you know anything more about infectious diseases than I do, or infection rates, or herd immunity, or anything like that. So why would you write it, and why would you expect that people would care what you had to say?
Yeah, look, I don't know why people would care what I have to say, to be candid, but I did want to get people to think, and I wanted to sort of zoom the debate out a little bit, and I wanted to get a different discussion than the one we've been having, because the one we were having was not right, and I would say, David, you were 100% right. I'm not an epidemiologist, I'm not a doctor, I'm not a scientist. Actually, I've been trained for 35 years as a research analyst. And now I manage a team of research analysts. And all we do all day long is pour over data, analyze data, talk to experts, and draw inferences and conclusions about subjects and topics that previously we didn't know anything about. So I have a lot of my team working on the virus, as you can imagine, since it's impacting the markets and the portfolio. And so I started to see some things in the data which scared the living daylights out of me.
Setting up now.
What were the things that scared the living daylights out of you?
The first thing that set me off was that my team was telling me that the opening data, that the states that were opening, that this was a red state and blue state issue. And I almost lost my mind. There is nothing political about what we were dealing with in this crisis whatsoever. And it began to become clear to me that there are a lot of people out there in media and frankly in politics whose sole objective is to beat Trump. And the economy has obviously been the only leg that he's had to stand on. So if they can keep that out from under him, they can beat him. I don't have a particular dog in the election fight, but I cannot let politics get in the way of such important decisions. That's one. Two, I began to see media like Google censoring things like herd immunity. I want to read you something because it's quite shocking what they're saying. But Google responded to something they took down with this comment: "We quickly remove flagged content that violates our community guidelines, including content that explicitly disputes the efficacy of global or local health authority recommended guidance on social distancing that may lead others to act on that guidance." I'm sorry, David, did we move to China? And is the government always right and we have no right to question them? No right to give dissenting opinion? So I'm concerned that people are confused, they're in a fog, they're trying to look right in front of them and protect themselves and their family from the virus. I understand that, but they're not zooming out and looking, how do we get to the other side? And to me, the other side, metaphorically speaks.
Exactly how far down that road the government is going to go. Yeah. Eunice, thanks. It's great to see you. Appreciate you sticking around for us.
Eunice Yoon in Beijing. Let's stick with China, talk about tensions between the two countries ratcheting up over issues surrounding the pandemic, and both sides are pointing the finger at who's to blame. Not only that, but the Senate just approved new legislation that could ultimately bar many Chinese companies from listing on U.S. exchanges. What does it all mean for our trade deal and the markets? Joining me now is Patrick Chovanec, the economic advisor at Silvercrest Asset Management and a longtime China watcher. Patrick, it's good to see you. So, yeah, I guess I wonder to what extent the public is going to blame the president or blame China, over the pandemic and how that's all likely to play out for the rest of the year.
Well, everybody wants the public, both in China and the United States, to blame somebody else.
Right.
And that's partly why coronavirus has accelerated the already existing tensions between the United States and China. And, there are a lot of observers who say that the relationship is at its lowest ebb since, at least 1989, the Tiananmen crackdown. And some say even more, even worse than that, because there are so many different fronts of confrontation opening up.
Yeah, so where do we go from here? If I'm an investor and, for example, I've been investing in Alibaba, is there the real chance they might have to delist even for a while? Or is that Senate legislation part of just posturing back and forth with China right now?
It's difficult to say how much of this is bark and how much is bite. Obviously there's a dynamic here where politicians in both countries want to deflect what they worry will be blame for the way that coronavirus has played out, its economic impact onto the other country, and that's heating up some of the rhetoric. But there are, like I said, long-standing issues between the United States and China that there's been a shift in D.C., not just over the past few months, but over the past few years, towards a much harder view of China and the challenges that it presents. It's been a bipartisan one. It's not just been led by President Trump.
Absolutely.
And there's also been a hardening on the other side in China, where they have the view that there's much less to learn from the West, and they're much more confident in confronting it.
Right, they've figured it all out, and now they have the heft to kind of throw back our way. I think it's interesting when I think about the dependence of corporate America on China in terms of growth, manufacturing and so forth. I mean, you say, and you write here, that there's literally a shift in view towards China, not as a difficult partner or rival, but as an enemy. I mean, how should American companies feel about doing business with a country whose leadership we feel is an enemy of the United States?
It's going to be a real challenge. I mean, you had Senator Hawley get up in the Senate yesterday and basically, say that. And a lot of companies are going to have to make choices. It's going to be different for different companies. If you're in the technology space, you may have to decide whether you can do business with companies like Huawei, either as a customer or a supplier. If you are based in Hong Kong, the news has come out now that China is going to impose new laws on Hong Kong, which may call its status into question, and how the United States is going to respond to that is into question. There are other tensions relating to Chinese companies that are listed in the United States, as you mentioned.
Yeah.
That has actually been an issue for many years, but it's kind of been off the front burner, and now these tensions have brought it back on the front burner and raised a question mark over what that status would be.
Yeah, and it's
if you read a prospectus of Alibaba, you'd be aware that this issue is out there, but it's kind of been, not a live issue for the past several years.
But it's definitely a potent tool. In that sense, I'm not surprised it's being used right now. My final question to you, when we see these headlines out of China talking about how they might retaliate against the U.S., depending on if we move forward with the delisting or other things right now, what is the most likely form of retaliation that they have and are willing to use, do you think?
I think when it comes to delisting, there's going to be a movement, and there was, back when this was an issue a couple years ago, a movement to just delist Chinese companies and list them back in China, which is now more plausible than it might have been in the past. So Chinese, in the end, that actually might be a solution. That might be a good thing. Not every Chinese company necessarily belongs on U.S. exchanges if there is an issue with them complying with U.S. securities laws. But the question will be, how disruptive will that process be? Will it be a cooperative process, which I think it could be, or will it be more about, politicians throwing bombs at each other, and then with investors
we should be, thinking about it if we do move forward with that move. I mean, people throw around things like, oh, they're going to sell our, they're not going to sell our treasury. What do you think might be more likely?
Well, on the lot, I mean, China, it's unlikely that China simply going to dump treasuries. I've argued in the past that that is not really a plausible option for them. The United States has been threatening to selectively default on U.S. treasuries in order to claim reparations from China over coronavirus. I don't think that's really going to happen. But there might be talk about that, and it might raise some questions in people's minds. So the big concern here is how much of this is rhetoric and positioning, to a new reality, in a relationship, new kind of hard-edged reality between China and the United States, and how much of it is actually going to be translate into actions and things that create negative economic headwinds at a time where the global economy is really fragile.
Exactly. And like you said,
we already saw last year trade tensions between the United States and China have a negative effect on the U.S. economy. It wasn't anything compared to what we've seen under coronavirus, but it did put a lot of business confidence on its back foot, and manufacturing sector went into traction. So if we see that come back again, if for instance, the ceasefire, the U.S. trade deal between the United States and China falls apart and we go back to escalating tariffs, that uncertainty comes back at a time when the U.S. economy and the Chinese economy is a lot more fragile.
Yep, and the world economy, big contrast from 2008 when there was more cooperation. Patrick, thanks very much. Patrick Jovanek talking through how this might continue to play out today. Coming up on the exchange, San Francisco Giants, Square, and Twitter all saying they'll let employees permanently work from home, and they may not be the last ones. We'll look at the consequences that could have for the city. Plus, how the working from home trend can cost companies millions in security. All that when the exchange comes right back.
Thinking about getting healthier, sleeping better, or losing those last few pounds? Think Noom. Noom is a totally new approach that uses psychology and small goals to help you make lasting change. Backed by science, Noom shows you the why behind your decisions and habits, and gives you the tools to change them for good. So get started today at Noom.com. NOOM.com. Change your thinking, change your habits, change for good. With Noom. Ugh, it was embarrassing.
Yeah, we were all set to buy a car until we sat down with a finance guy.
He credit shamed us.
I know, right?
We knew our credit wasn't great, but between this and getting rejected for a credit card, enough was enough.
I did my homework and found that CreditRepair.com has a hotline to help people like us repair our credit and boost our scores. And that their past clients saw their credit scores jump an average of 40 points.
Yep, and the call was free.
Yeah, in a few minutes, their specialist showed us what was hurting our credit and how to fix it. Bottom line, we stopped letting bad credit keep us from the things we deserve.
Like that new car in our driveway.
Call the CreditRepair.com hotline and ask them how to help rebuild your credit so you can qualify for credit cards, car or home loans. No matter how bad your credit is, no one is turned away. Fast track the credit repair process. Call 800-284-7095. 800-284-7095. 800-284-7095. Not available in all states.
What if your email knew who had the right answers? What if you could find those answers in old emails, even if you weren't included? Then it wouldn't be email at all. Find information faster in Slack. Instead of chasing down that one person who might have an answer, ask questions in organized channels. Or find answers by searching public conversations in channels across the company. Slack. Choose a better way to work. Get started at slack.com.
The world of business.
They may have to actually extend the merger.
Opportunities driving investors.
It's a reason to buy.
Your money on the line.
This is a strong consumer economy.
CNBC.
Let's get the very latest on the stars.
Sirius XM 112.
Particular, and Eamon Javers is looking at the cost of companies as they try to keep home systems safe from hackers. Tate, let's start with you.
Hey, Kelly, we're seeing a wave of companies going remote, and depending on how many tech giants follow suit, could have some big implications for Silicon Valley. Facebook CEO Mark Zuckerberg just saying that his company would allow most employees to request a permanent change to work remotely. He expects, quote, a substantial shift towards remote work in the next decade. We also had Shopify CEO saying just now that after next year, most employees will work remotely as as well. He says, quote, office centricity is over. Twitter and Square were the first U.S. tech giants to announce permanent work from home. According to a new study out today, a bulk of those tech workers are willing to pick up and leave the Bay Area. 2 out of 3 people, or 66% of respondents, would consider relocating if given the option to work remotely. The firm called Blind surveyed more than 4,000 people for that. And this week, Visa, MasterCard, and Spotify were the latest companies to extend work-from-home orders through the end of this year. A lot of buzz, Kelly, around the potential fallout for real estate in San Francisco specifically. Leases here are often month-to-month, making it easier for folks to pick up and leave.
Ooh, I did not realize that. We'll see if it accelerates. I'm sure a lot of other communities would welcome the influx. Okay, thanks, Kate Rooney in San Francisco. Now let's get to Eamon Javers, who has a story that it's not all roses working from home, a big problem for companies, Eamon.
This is not looking good.
Yeah, that's right. You just heard Kate talking about the fallout in terms of real estate. Well, the fallout in terms of security is also significant here. For a lot of companies, which basically in the space of about 5 days in March, moved millions of workers out of the office and into a work-from-home environment. You can see me, I'm standing in my living room right here, doing exactly the same thing. And part of the security problem for that is you've now got all of this company data. It's now traveling over family routers for the internet that never were designed to have this kind of security problem that they were dealing with. So you've got a lot of company data now that's flowing over the same routers that your kids' Wi-Fi is on, your kids' video games, your kids' social media, all of that. One security expert tells me is reaches through of security risk for American companies that are all trying to deal with this. How much would that cost to fix if you wanted to legitimately secure all of those seats at home in terms of the corporate standard? Well, Mike Convertino of the cybersecurity firm Arcio ran an estimate for me, and it's wide-ranging here, but he says somewhere between $247 and $1,755 per employee, depending on what their home internet setup is like and exactly what improvements they might need. We're talking about potentially $1,000 a seat for companies to secure all of that work-from-home technology and separate the kid stuff out from parent stuff, the corporate data from the family data. All of that very tricky to do, and especially at a time, Kelly, when I'm told a lot of the corporate security guys were deputized during this rush to get these companies into the work-from-home posture. The corporate security guys were actually just helping to send laptops out to people and get wiring up and running and make sure that the Wi-Fi was functioning in everybody's home. They were doing IT jobs, not security jobs, just at a time when security was the most vulnerable.
Yeah, and the only thing I wonder, obviously it has a big one-time cost, but going forward, would it be cheaper for companies to spend on having people working from home than having them in the office? I could see the argument being made in either direction.
Yeah, look, I think the bottom line here is that work from home is not free, right? And not everybody can do it. You're going to have to spend some money as a company to make sure that people have the security, they have the tools that they need. A lot of people are going to need office space, desks, furniture, all of that. If this is going to become semi-permanent, as Kate was talking about, the companies are going to need to spend some money behind this, and that's money that they haven't really spent right now because the assumption was this was just going to be a temporary situation. If that becomes permanent, you're looking at a big spend.
Absolutely, and in an odd way, maybe that's good for the economy, although I'm sure it'll hurt margins. Eamon, thanks. It's a really important point. Eamon Javers with the corporate security angle for us. Coming up, tech taking charge. The sector is the only positive one in the market for the year, and the Dow Jones Internet ETF is up 40% in 2 months. Valuations, have they gotten too high? One analyst says no, and the FANG needs to rally another 25%.
Hello, East Street Nation, and all friends, fans, and listeners from coast to coast. This is Bruce Springsteen with music for troubled times. Bruce Springsteen hosts Volume 4 of his DJ show from his home to yours on East Street Radio. Hear it through the weekend on East Street Radio Channel 20 or anytime on demand with the SiriusXM app.
Thinking of your future? Now's the time to take control of your career and own your own business. Decorative concrete is one of the fastest growing trends in home remodeling, and Concrete Craft is the largest decorative concrete franchise in North America, with franchise opportunities available in your area.
What really drew me to Concrete Craft was low overhead, a small amount of team that gets you to pretty good revenue.
Concrete Craft Craft is backed by the leading home service franchisor with over 25 years of experience, who supports their franchisees in good and bad times.
Did you design the sales side, how to do a quote, and then all the way through installation and mixing and colors and different products? You can't learn all this in 2 weeks.
As seen on Extreme Makeover Home Edition, you're not pouring concrete, you're transforming ordinary concrete into extraordinary designs. Learn more at concretecraft.com/radio or call 888-81-CRAFT. That's concretecraft.com/radio or 888-81-CRAFT.